you for the invitation. I thank you for showing up for this lecture. I promise it will not be too long, just slightly more than half an hour, I guess. And I hope it is instructive. Let me begin with a brief description of what a capitalist and entrepreneur does. And then in the second part explain how the job of a capitalist entrepreneur is changed under status conditions, that is, the environment of the existence of the state. What the capitalist does is this. He saves, or he borrows saved funds, then he hires labor, he buys or rents capital goods and land, and he buys also raw materials, and then he proceeds to produce his product or service, whatever it is, and he hopes that he will make a profit. The emphasis being on hopes, as I will explain in a second. Profits are simply defined here as an excess of sales revenue over the cost of production. The cost of production, however, do not determine the revenue. Otherwise, if the cost of production would determine the price and the revenue, everyone could be a capitalist. No one would ever fail then. Rather, it is anticipated prices and anticipated revenue that determine what production cost the capitalist can possibly afford. So he has an idea of what will I likely make, and that will tell him what production cost can I possibly accept. Now, the capitalist does not know what the future prices will be or what quantity of his product will be bought at such prices. This depends on the consumers, and the capitalist has, of course, no control over what the consumers will or will not buy. The capitalist must then speculate what the future demand for his products will be, and he can go wrong in his speculation. In which case, of course, he does not make profits, but he will incur losses. To risk his own money, to risk your own money if you're a businessman, in anticipation of an uncertain future demand is obviously a difficult task. Great profits may await you, but also total financial ruin. Very few people are willing to take this risk, and even fewer are good at it and stay in business for any length of time. In fact, there is even more to be said about the difficulty of being a capitalist. Every capitalist stands in permanent competition with every other one for the invariably limited amounts of money to be spent on their goods and services by consumers. Every product competes with every other product. Whenever consumers spend more or less on one thing, they must spend less or more on another. Even if a capitalist has produced a successful product and earned a profit, there is nothing that guarantees that this will go on. Other businessmen can imitate his product, produce this product more cheaply, underbid his price, and outcompete him. To prevent this, every capitalist must thus continuously strive to lower his own production costs. Yet even trying to produce whatever you produce ever more cheaply is not enough. The set of products offered by various capitalists is in constant flux, and so is the evaluation of these products by consumers. Continuously new or improved products are offered on the market, and consumer tastes constantly change. Nothing remains constant. The uncertainty of the future that faces every capitalist never goes away. There is always the lure of profits, but there is always the threat of losses as well. Again then, it is very difficult to be continuously successful as a businessman and not to sink back to the rank of a mere employee. In all of this, there is only one thing that the businessman can count on and take for granted, and that is his real physical property. And even that is not safe, as I will explain in a few seconds. His real property comes in two forms. First, there are the physical resources, the means of production, including the labor services that he has rented, that the capitalist has bought or rented for some time, and that he combines in order to produce whatever he produces. The value of all these items is variable, as I have already explained. What is stable about them is only their physical characteristics and their physical capabilities. But without the physical stability of his productive property, the capitalist could simply not produce what he produces. Second, besides his productive property, the capitalist can count on his ownership of real money. Money is neither a consumer good, we do not eat it, nor is it a producer good. We do not use it to produce something else out of it. Money is the common medium of exchange. As such, it is the most easily and widely sold of all goods. And it is used as a unit of account. In order to calculate profit and loss, the capitalist needs recourse to money. The input factors and the output that he produces are incommensurable, like apples and oranges. They are made comparable, only insofar as they can all be expressed in terms of money. Without money, economic calculation, comparing your input cost with your revenues, is impossible, as Ludwig von Mises above all has explained. The value of money is also variable. But money too has physical characteristics. Genuine money is commodity money, such as gold or silver, and money profits are then, excuse me for a second, and money profits then are reflected in an increase in the supply of this commodity, that is increase of gold or an increase of silver, which is at the disposal of the capitalist. What can be said then about both the capitalist's means of production and his money is this: their physical characteristics do not determine their value. The value, after all, depends on what consumers think of these things. But without their physical characteristics, they would have no value at all. And changes in the physical quality and quantity of his property do affect the value of his property. Whatever other factors, such as changing consumer evaluations, may also affect the value of his property. So now let me introduce the state and see how this affects the business of a capitalist. The state is conventionally defined as an institution that possesses a territorial monopoly of ultimate decision-making in every case of conflict, including conflicts involving the state and its agents itself. And secondly, the state is an institution that has a territorial monopoly of taxation. That is, the state can unilaterally determine the price that its subjects have to pay to it for performing this task of being the ultimate judge in every case of conflict. Now, to act under these constraints, or rather under this lack of constraints, is what constitutes politics and political action. And it should be clear from the outset that politics then, by its very nature, always means mischief. More specifically, we can make two interrelated predictions as to the effect of a state on the business of business. First, and most fundamentally, under statist conditions, real property will become what may be called Fiat property. And secondly, and more specifically, real money, such as gold and silver, will be turned into fiat money. Now let me explain the first point. With the state being the ultimate arbiter in every case of conflict, including those conflicts in which he himself or his agents are involved, the state has essentially become the ultimate owner of all property. In principle, the state can provoke a conflict with the businessman and then decide against him by expropriating him and making itself or someone to the state's liking the owner of the businessman's physical property. Or else, if the state does not want to go that far, it can pass legislation or regulations that involve only a partial expropriation of the physical property of the businessman. It can restrict, for instance, the uses that a businessman can make of his own physical property. Certain things that the businessman could do before, he can be outlawed from doing again with his property in the future. The state can, of course, not increase the quality and quantity of real property in existence, but it can redistribute it as it sees fit. It can reduce the real property at the disposal of the businessman, or it can limit the range of control that the businessmen are allowed over their own property, and it can thereby increase its own property or that of its allies and increase its own range of control over existing physical things. The businessman's property then is their property only in name. It is granted to them, so to speak, by the state, and it exists only as long as the state does not decide to do otherwise. Constantly, so to speak, a Damocles sword is hanging over the heads of businessmen. The execution of their business plans is based on their assumption of the existence at their disposal of certain physical resources and of the physical capabilities of these resources, and all of their value speculations are based on this physical basis being given. But these assumptions about the physical basis can be rendered incorrect at any time, and their value expectations and value calculations can be vitiated at any time as well, if only the state decides to change its current legislation and regulations. The existence of the state then heightens the uncertainty that faces every businessman. It makes the future less certain than it otherwise would be the case. Realizing this, many people who might otherwise become businessmen will not become businessmen at all, and many businessmen will see their business plans spoiled, not because they did not correctly anticipate future consumer demand, but because the physical basis on which their plan was based was altered by some unexpected and unanticipated change in state laws and in state regulations. Secondly, rather than meddling with a businessman's productive capital through confiscation and regulation, however, the state prefers to meddle with money. Because money is the most easily and widely saleable of all goods, it allows the state operators the greatest freedom to spend their income as they like. Hence, the state's preference for money taxes, that is, for confiscating money income and money profits. Real money becomes subject to confiscation and changing rates of confiscation. This is the first sense in which money becomes fiat money under statist conditions. People own their money only insofar as the state allows them to keep it. But there's also a second and even more perfidious way in which money becomes fiat money under statist conditions. States everywhere have discovered an even smoother way of enriching themselves at the expense of productive people, namely by monopolizing the production of money and replacing real commodity money and commodity credit with genuine fiat money, paper money, and fiat or fiduciary credit, paper money credit. The state decides, on my territory, by law, only I am permitted to produce money. But that is not sufficient, because as long as money is a real good, that is, a commodity that must be costly produced, there is nothing in it for the state except expenses. More importantly then, the state must use its monopoly position in order to lower the production cost and the quality of money as close as possible to zero. Instead of costly quality money, such as gold or silver, the state must see to it that worthless pieces of paper, which can be produced at practically zero cost, will become money. Now, under competitive conditions, that is, if everyone were free to produce money, a money that can be produced at zero cost would be produced up to a quantity where marginal revenue equals marginal cost. And since marginal cost of producing paper money is zero, the marginal revenue, the purchasing power of money, would be zero as well. Hence, the necessity to monopolize the production of paper money. Only the state is allowed to produce paper money. Not everyone is supposed to produce this paper money. Because only if it is monopolized is it possible that the supply of money can be restricted in such a way that hyperinflation will be avoided and the purchasing power of money will not fall immediately to zero. Now, having monopolized the production of money and reduced its production cost and quality to virtually zero, the state has made a marvelous accomplishment. It costs almost nothing to print money, and one can turn around and buy oneself something really valuable for it, such as a house or a Mercedes. Now, what are the effects of such fiat money, and in particular, what are the effects for the business of business? First, and in general, more paper money does not in the slightest affect the quantity and quality of all other non-monetary goods in existence. Rather, what the additional money does is two things. On the one hand, money prices will be higher than they otherwise would be, and the purchasing power per unit money would be lower. And secondly, with the injection of additional paper money, existing wealth will be redistributed in favor of those who receive the money first and at the expense of those people who receive this newly printed money later. To explain this quickly, those who get the money first, which are always the government itself and the central bank, can with the newly printed money buy goods at the old low prices. Then prices are gradually driven up. And those people who get the money very late and were on fixed incomes will see that once they get the money, all prices have already risen, whereas their income has not risen and they are less wealthy than they were before. And now, specifically regarding the capitalists, paper money adds another dose of uncertainty to his business. If and as long as money is a commodity, such as gold and silver, it may not be exactly easy to predict the future supply and the future purchasing power of money. However, based on information about current production costs and industry profits, it is very well possible to come up with a realistic estimate of it. In any case, the task of predicting the future supply of commodity money and the task of predicting the future purchasing power of commodity money, such as gold and silver, is not pure guesswork. And while it is conceivable that with gold or silver as money, nominal money profits may not always equal to real profits in terms of purchasing power, it is at least impossible that a nominal money profit should ever amount to nothing at all. There is always something left, namely quantities of gold or silver in the hands of the businessmen. Now, in distinct contrast, with paper money, the production of which is unconstrained by any kind of natural or physical limitations or scarcities, but dependent solely on the subjective whim and will of the money producer, the prediction of the future money supply and the future purchasing power of money does become guesswork. Central banks can increase the money supply from one day to the next in incredible amounts. They can double the amount of money in existence from one day to the next. It is almost impossible for anyone to predict this thing. Those people who produce the money themselves do not know what they might do the next day in terms of decisions regarding the supply of money. Becomes guesswork. What will the money printers do tomorrow? What will they do in 2 days from now? And it is not just conceivable, but it becomes a real possibility that nominal money profits under paper money turn out to represent literally nothing but bundles of worthless pieces of paper. Moreover, hand in hand with fiat money comes fiat or fiduciary credit. This, just as paper money can be created out of nothing, paper money credit can also be created out of nothing. And this adds another dimension of uncertainty to the business of the businessman. If the state can create money out of thin air, it also can create money credit out of thin air. And because it can create money out of thin air without any previous savings on its part, it can offer cheaper loans than anyone else can do, at below market interest rates, and even at interest rates as low as zero. The interest rate is thus distorted and falsified, and the volume of investment will become divorced from the volumes of savings. Systematic malinvestment is thus generated, that is, investment that is unbacked by any real savings. And an unsustainable investment boom is set in motion, which is necessarily followed by a bust, in which it is revealed that on a large scale, errors have been committed by businessmen. Last but not least, under statist conditions, that is, under a regime of fiat property, state-granted property, and fiat money, state-produced and state-granted money, the character of businessmen and of doing business is changed. And this change introduces another hazard into the world. Absent a state, without the state, it is consumers that determine what will be produced, in what quantity, and in what quality, and who among businessmen will succeed, and who among businessmen will fail. With the state, the situation facing businessmen becomes entirely different. It is now the state and its operators, not consumers, who ultimately decide who will succeed or who will fail. The state can keep any businessman alive in subsidizing him or in bailing him out, or else it can ruin any businessman by deciding to investigate him and find him in violation of some state laws or some state regulations. There are so many state laws and regulations that every businessman is permanently, continuously breaking some of them. They might not even be aware of the fact that they do, but the mere existence of such a multitude of laws on the books makes it possible to find anyone that you want to find guilty of some violations of some laws. Moreover, the state is flush with taxes and with fiat money, after all he can print it as he wants, and can spend more money than anyone else. It can make any businessman rich or not. And the state and its operators have a different spending behavior than normal consumers. They do not spend their own money, but they spend other people's money. And in most cases, they do not spend this money for their own personal purposes, but for those of some anonymous third parties. And accordingly, they are frivolous and wasteful in their spending behavior. Neither the price nor the quality of what they buy is of great concern to them. If you spend your own money, you'll be very much concerned about the price and the quality that you get for it. If you spend other people's money, you tend to be enormously generous and the quality is unimportant to you or of minor importance to you. In addition, the state can of course also go into business itself. And because it doesn't have to make profits and avoid losses, as it can always supplement itself by printed up money or through taxes, it can always outcompete any private producer of the same or similar goods or services. This applies, of course, also to private universities. They can always be easily outcompeted if the state wants to. And finally, by virtue of its ability to legislate, to pass laws, to make laws, the state can grant exclusive privileges to some businesses which insulate and shield these businesses from competition from other businesses, and by the same token it can partially expropriate and disadvantage other businesses. Now in this environment, it is imperative for every businessman to pay constant and close attention to politics. In order to stay alive and possibly prosper, the businessman must spend time and effort to concern himself with matters that have nothing to do with satisfying consumers, but have instead to do with power politics. And based on his understanding of the nature of the state and of politics, then, every businessman must make a choice which in some important sense is a moral choice that he must make. A businessman can either join in and become part of the vast criminal enterprise that is the state. He can bribe politicians, political parties, or public officials, whether with cash or in kind, including, for instance, promises of future employment in the private sector as board members, advisors, or consultants, in order to gain for himself economic advantages at the expense of other businesses. That is, a businessman can pay bribes to secure state contracts or subsidies for himself and at the exclusion of others, of his competitors. Or he can pay bribes for the passing or maintenance of certain laws that secure him and his business legal privileges and monopoly profits and capital gains, while partially expropriating and thus screwing, so to speak, his competitors. Needless to say, countless businessmen have chosen this path. In particular, big banking and big industry have thus become intricately involved in the state apparatus itself, and many a wealthy businessman has made his fortune more on account of his political skills than on account of his ability as a consumer-serving economic entrepreneur. In a country such as Romania that has a communist past, I do not need to emphasize how true this is, how many of those people who are tremendously rich are not rich because they are good businessmen and have served consumers, but because they had the right connections. Now, this is in other countries also the case, except, of course, it has taken place somewhat more in the distant past. But in your case, in the cases like the Soviet Union, so many of you know how these people became tremendously rich, who are now tremendously rich, not because they were big businessmen, but because they were big crooks. Or else, and this is the alternative, a businessman can choose the honorable, but at the same time also the far more difficult path. This businessman is aware of the nature of the state. He knows that the state and its operators are out to get him and bully him, to confiscate his property and money, and even worse, that they are arrogant, self-righteous, haughty, and full of themselves. Based on such understanding, this very different breed of businessmen then tries his very best to anticipate and to adjust to the state's very and every evil moves, but he does not join the game. He does not pay bribes to secure contracts or privileges from the state. He simply produces the best product that can be produced. Instead, he tries as good as he can to defend whatever is still left of his property and of his property rights, and he tries to make as large a profit as possible in doing so, and then using this profit for those purposes that he deems appropriate. Thank you very much.
We will go like this. The professor will take a few questions, and after those questions, there will be a session of book signing outside. For those who would like to sign by the professor. So let's try to have some questions. The first question, please.
My name is Hans-Hermann Hoppe. I'm a student at the National School of Political Science and Administration. My question is regarding the interest rate and how does that affect the goods in circulation. Let us assume that tomorrow National Bank of Romania decides to set the interest rate at 15%. Now that would force the banks to try to give credit to businessmen that think they're capable of having a great run. Now, if that doesn't happen, that should increase the money in circulation and increase the value of the money that are still in circulation and not in banks. So, how does that affect the goods and how does that affect entrepreneurs and people?
The interest rate is a market phenomenon. The idea that there is any institution that fixes the interest rate is the main problem. The interest rate forms in the market as a result of the supply of savings on the one hand, and on the other hand, the demand for savings on the part of investors. So the problem is simply, why is there any institution that thinks that it can set what the interest rate is, despite the fact that the interest rate is a market phenomenon? In all other areas, we would say price controls cause problems. If we have minimum price controls or we have maximum price controls, we have either shortages or we have permanent surpluses of goods. What the central bank does is they fix interest rates regardless of the market conditions are, and this then causes all sorts of economic problems, just as price controls would also cause all sorts of economic problems. So interest rates should not be fixed by any institution. They are the result of market forces.
Professor? Hello, my name is Vladis Stoyanov. I would like to take this topic to a further, more specific thing in regards to licensing and innovative products that are done by companies. Let's say that a company has a new product that falls under the property of that company, and the next day that product can be copied by anybody because the product goes on the market. So in this case, should it be a government or another body that would take care of licensing, or it should freely run on the market in a free competition?
Again,
the product that's going on the market, and should it have a license from the government, or should it be only on a free market competition?
there should be no licensing laws whatsoever. You can produce whatever you want, and other people can imitate it and try to improve the product if they want. There is no such thing as intellectual property rights. There are only property rights in physical property. So let's say I sing a song, and you hear me singing the song, and then you repeat the song. Have you violated property rights of mine or not? The answer is no, you have not violated any property rights of mine, because patterns, ideas, algorithms, formulas, all of these things are not scarce goods. Once they have been sought, once other people grasp them, everybody can imitate them, and by imitating them, you take nothing away from me. If you sing the same song that I sang before, I have just as much property as I had before. On the other hand, if I would outlaw you from repeating, so to speak, my song, then I am made the owner of your physical property. That is, then I become a partial owner of you. I can determine what you can do with your vocal cords, for instance. So licensing laws, that is, prohibit other people basically from imitating what somebody else has produced, should be abolished in one fell swoop. It should not exist at all.
But the profit generated from the companies will be much, much smaller in this case.
That might well be, but on the other hand, they prevent, of course, from progress spreading tremendously and enriching mankind by other people imitating things. We did not have licensing laws for most of human history. We did not have patent laws for most of human history. This is all something that big pharmaceutical companies and so forth came up in order to make huge profits and rip off other people who can simply reproduce the same product. What's wrong with me just buying a product and building the same thing? You invent a mousetrap, and I look at the mousetrap and say, I can build a mousetrap also. Why would I need to pay you royalty in order to produce the same thing that you produce without me having taken anything away from you? You have your mousetrap still. You can still produce it. You can try to produce it more cheaply than I can produce it. It has not contributed to greater wealth being produced. That is a propaganda that those people who benefit from it try to spread. No, it has hampered economic progress and slowed it down tremendously. Again, what is very important to recognize is, if there exists these types of so-called intellectual property rights, then you have no right anymore in physical property. If you copy me, I have still all my physical property just as yesterday. But if I outlaw you from copying me, then that means that I partially own your physical property, because you can no longer do with your physical property whatever you please, despite the fact that you have not taken anything away from me.
Professor, my name is Alexander Podrucki, and I would like to make the following question. There is no doubt in my mind that the gold standard would be much more beneficial than the fiat money system. But is it possible for a small country to switch to the gold standard unilaterally in the current fiat money context? I mean, the businessmen in the country would probably try to get credit from outside the country because it's much more cheaper, because they basically can get interest rates much lower than on a free market.
I think it would be possible if you introduce the idea that every additional amount of paper money created, up from now on, so to speak, would have to be backed by a commodity. You will not be able to back all of it by a commodity, but every additional node created now above and beyond of the nodes that are already in existence. If you decide every additional node must be backed by a commodity, then even small countries could do this.
Hello? Okay. Okay. Number.
Hello, my name is Radu Ionescu. So, as you said, there's a big problem about predicting what the monetary policy is going to do. It's not just printing money, it's also the fractional reserve system that multiplies the printed money. And in this current context, the world has a huge problem with excessive credit out of nothing and such. And I would like to ask that, in your opinion, are we facing a period of massive inflation in the near future, or first there are going to be some deflation followed by inflation? Thank you.
I think the danger of, the so-called danger of deflation does not exist. If you simply look at what the central banks are doing, they're creating money at the massive rate. That it does not show up right now in drastic increasing inflation rates is due to the fact that in an economic crisis, people, including banks, have a higher demand for cash holdings. That is, they want to increase their cash balance. And by increasing the cash balance, that tends to have the effect of lowering prices. If confidence returns, so to speak, to the markets, then this massive increase in the money supply will show up in quite drastic increases of the price level. And you do already see significant increases in the price level. The official price indices that are published are governmentally manipulated price indices. they have the tendency to throw out all the items out of their baskets where the prices go up sharply and add those things into their baskets where prices happen to fall. Some people have investigated what if we would use the construction of price indices that they used 15 years ago and apply them to the present, and have come up with estimates of 10 to 15% inflation taking place even currently. Maybe one additional word about the alleged problem of deflation. That is, we are always told we must prevent under all circumstances deflation. Now, this is just a myth. Look at what we see. First of all, during the last 20 years or so of the 19th century in the United States, we had and there was still some sort of gold standard then in existence. Prices continuously fell from year to year. Those were the years with the highest economic growth rates that the United States has seen in its history. If you look at the present world, you find entire sectors of the economy where we do continuously see deflation taking place. Look at the electronics industry. A computer will be cheaper next year than it is today. In 2 years, it will be still cheaper. Does that mean that these businesses are in deep trouble? Quite to the contrary. So yes, of course, businessmen can operate successfully under deflationary conditions. For them, it is only important what is the difference between my buying prices and my selling prices. If the input prices, if that what goes into building a computer becomes cheaper all the time, and the computer becomes cheaper also, I can still make profits. So deflation is not really a problem, but all governments, of course, love inflation. Inflation is what they want, because that means they print something up and then they can spend it. They don't want deflation. Well, they are interested in making us believe that deflation would be a great catastrophe, not because that is really true, but their interest is interest in inflation. And we do have inflation, and we do get more as soon as a little bit more confidence has returned to the market and people give up holding excess reserves. I mean, the banks are flush with money, but they are reluctant to loan it out and hold on to it, and wait until conditions become a little bit more favorable, and then the multiplier effect will set in and we will see massive inflation.
Thank you for coming. My question is more basic and I guess has more to do with political science. Regarding your definition of the state, of course it was more traditional at the beginning regarding monopoly of force, territoriality and population, but when you started elaborating, I found that it was quite broad and quite generalized, and I thought, did you have specific types of regimes in mind, or do you find it more general? Because I do find that, especially when you were talking about legislation and the fact that the state might be able to pass anything it wants, I mean, there are certain watchdog global organizations that do specifically this, try to prevent democracies from doing such things. There's a differentiation of powers in the state and all that, and I mean, what was your idea and whether it's generally available? Thanks.
No. My interest was to explain that states as such are a danger, insofar as they are judges even in those cases in which in cases of conflict where they themselves are involved. I mean, just to give you an example, if a policeman mistreats you, and you complain about the policeman, who then decides whether you were right or the policeman? A judge who is employed by the same agency as a policeman. You can predict that by and large they will find in favor of the policeman and will find against you. That it must not be true in every single case, but it would be, so to speak, almost paradoxical if it were not true in the long run that they will find in their own favor. Look at when socialism fell apart. My grandparents had been expropriated in East Germany. When Germany was reunited, so my mother thought, now I will get my property back, because the German constitution says we protect private property. So all these people went to the German Supreme Court, and I had predicted to my mother, you will be very disappointed about what they will likely do. And of course, what did the Supreme Court say? Yes, of course, we protect private property. There should be some sort of compensation, but the compensation should have nothing to do with the market value of the property. How much it was, they determined. Now, this is what states do, what they predictably do. Now, you are right. There exist, of course, all sorts of different states. Some states do far more horrible things than other states do. But there are problems involved simply by virtue of the fact that some institution is a state. Then you can predict that something evil will happen. In some cases, more evil thing happens, and in other people, less evil things happen. But if you decide in every case of conflict who is right and wrong, including conflicts that involve yourself, you can predict this will not end in a very nice way. I always try to explain that to my students when they say, but the state is necessary. We need a state. When I explain them what the state is, it's like, do you think people on the kindergarten level would believe this if 5 little children come together and say, sometimes we fight, we should just find a solution to this constant fighting that goes on among us. And then one child would say, hey, I have a great idea. I'm made the judge in every case of conflict. Of course, also in cases of conflict, when I have some conflict with you, it is always me who decides this. I think every child in kindergarten would recognize, hey, I don't think that is a very good idea, because they can predict what will likely be happening to them if this one guy is indeed made the judge in every case of conflict. And nonetheless, all of us, most of the population, 99% of the population believe in this type of nonsense, that you need an institution such as this, instead of recognizing that in cases of conflict with each other, you always choose an independent third party. That is, if you have a conflict with some state official, it should not be a state official who decides who is right and wrong. It should be some party that is entirely independent of the state apparatus, and they might frequently find that it is precisely the state and its agents that have caused the problems, and they should be the ones that get punished. But as long as it is always done by a party that is not an independent third party, then you get a big mess. I take one more question.
Hello, my name is Claudius. I have a question actually regarding an ongoing debate between two Austrian economists and former guests of the Mises Institute, Romania, and namely Professor Philibagis and Professor Porto de Soto about the euro. One of them, Professor Philibagis, argues that the euro has all the disadvantages of a fiat currency and the additional disadvantage of tragedy of communes, because it's spread through all Europe and different governments can do different deficits. Professor Ricardo Soto, on the other hand, claims that the euro is a better proxy for the gold standard because it is harder to inflate it due to the fact that the decision-making process in order to inflate the currency is harder. It's made harder by the European decision-making. So I was wondering what your opinion was on this. Thank you.
I'm friends with both of them, but in this case I have to indeed agree with Barbus and Eduardo de Soto was wrong on all of this from the very beginning because he was in favor of the introduction of the euro. He did not realize what the purpose of the introduction of the euro was. The introduction of the euro, the purpose of it was to weaken the German mark. The German mark was considered to be the main competitive currency against the US dollar. The US dollar, if you want to inflate the US dollar, it will fall against strong currencies. The strongest currency in Europe was the German mark. Not because of any German virtues, it was just the fact that within 2 generations there was a hyperinflation and the currency reform introduced. So the German public was just extremely sensitive towards the issue of inflation. And the German Bundesbank they had to take account of this public opinion in Germany. And since Germany is a strong economic country but politically extremely weak, because as you know, Germany is of course responsible for all the evil that ever happened in history, the propaganda that is distributed around the world, we are guilty for everything and we have to pay until the end of the day. And the Americans will see to it that the Germans will be always weakened. So they forced the Germans, so to speak, first into the European Union and then into accepting the idea of the euro, because the euro would be a less strong currency than the German mark was. And the idea that I think that Huerta de Soto saw, yes, a more widely used money has certain advantages over a money that is the national money. The money that had the most wide circulation was the gold standard, was an international money. Yes, an international money is good as long as international money is a commodity money. If you have, however, national paper monies, then competition between national paper monies is preferable, because the worst of all possible situations would be if we would have one world paper currency issued by a one world central bank, and that by definition, a one world paper currency cannot fall in the currency market against any other currency, because there is no any other currency. And because of that, there is no stopping point anymore whatsoever for the inflationary desire that governments have. So it was a conspiracy against the German mark, using this eternal German guilt that is heaped upon us to eliminate the strongest competitor against the US dollar and substituting the euro for it, and knowing full well that then you have members from Greece and Spain and so forth sitting on the same board, and of course they would just weaken the euro more quickly than it would have been possible to weaken the German mark. I'm sorry, I'm absolutely exhausted. I have to just stop.
Fiat. Unde e lăsat microfonul? Unde? Încă nu înțeleg nimic. Deci zi-mi acum, te rog, unde? Să mă, stai puțin.